Our philosophy in growth investing is centered on the idea that if we can find businesses where growth rates are improving and accelerating, and where that acceleration is being driven by underlying changes to business fundamentals, we believe those are the types of investments that will reward our clients. So it's very different from the traditional definition of growth, which just focuses on the absolute level of growth. Ours is more focused on the direction or the trend in growth. So the investment team follows a very specific checklist of criteria when we're picking stocks. And it falls on this concept of inflection, sustainability, gap, and valuation, or ISGV. Inflection is the idea that we are trying to identify businesses where there is a positive inflection point in fundamentals and growth rates. Ideally, we're able to find these in the early stages of that improvement. Sustainability is the idea that the improving trend that we've identified is sustainable for the next 2 to 3 years. We are trying to make a case for why we believe that improvement can be sustained, and then also identify the risks to our thesis. Gap is the idea that we are also trying to find opportunities where consensus is doing a poor job recognizing and rewarding that improving trend. Where we see consensus estimates being overly conservative is a good opportunity. And then finally, valuation. Ultimately, we do not want to be correct on the first three things, but not make money because we are paying too much for that growth opportunity. The benefit of our approach is that we believe we're able to deliver alpha, we're able to deliver excess returns for our clients in many sorts of market environment. American Century is a firm that's headquartered in Kansas City. We're a US-based asset manager. There are four things that define American Century. The first is we're privately held. We are able to manage our business for the long term. We're not beholden to short-term swings in our stock prices. The second is we're a pure play asset manager. What this means is all our resources go into managing our clients' portfolios. We don't have any conflicting or ancillary businesses that we need to support. The third is we are focused on performance as an investment manager. That is the primary driver of what we bring to our clients. And the last and probably most interesting aspect of American Century is our ownership structure allows us to deliver profits with a purpose via our relationship with the Stowers Institute for Medical Research. The fund is managed by three portfolio managers: Keith Creveling, Brent Puff, and Ted Harlan. All three have very long tenure as portfolio managers and as employees at American Century. And all three started off their career as analysts, so they fully understand this differentiated approach to growth investing. The portfolio managers are supported by a team of 7 global sector analysts that's dedicated to this strategy. The 7 global sector analysts provide the day-to-day research and due diligence for all the names that go into our portfolio. In addition to that, this core group of global equity investors also benefit from working very closely with 4 other investment teams based in our New York office. These teams use the same investment approach, use the same investment philosophy, and because we collaborate with those teams, we believe we make better decisions, we find better ideas. American Century believes that it's important to integrate ESG risks and opportunity in our bottom-up due diligence. The global growth team works very closely with a team of 6 ESG research analysts who provide proprietary ESG research on all the names that go into our portfolio. The objective of the Zurich Investments Global Growth Opportunities SMA is to deliver long-term capital gains for our clients, as well as to outperform the MSCI World ex-Australia Index over full market cycles. The fund is suitable for those investors looking for exposure to international markets. It's suitable for investors looking to diversify into managers with a differentiated approach to investing. And it's also suitable for those investors that are looking for a more tax efficient approach, as well as the ability to customize their portfolio via exclusions. This fund differs from our other strategies in that it is a more concentrated approach. Over time, we expect this fund to hold anywhere between 18 to 22 names.